Hello again, this is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is our Tuesday update. It is February 9th of 2021. We have headlines of the day. We're going to recap the last 48 hours, what we saw in the markets and what we see going forward. So thanks for watching. So if you're following along with Blanke Schein Wealth Management, one, we thank you. And if you're new to us, thank you. We want you to like, subscribe, and follow along and share with friends and family. We're providing updates. Now, we started about a year ago on a daily update. And so now we're going to consolidate that. We're going to go to Tuesdays, Thursdays, and obviously our Friday video updates with our Friday Insights brought to you by me. We also have Rick Jr. that's going to do financial foundations, and look for those updates as well, because those are excellent and something to definitely tune into, as well as our Monday recap. And that's just not a video edition, but it's a piece that we put out every Monday. So there's plenty of content. In addition to that, don't forget to watch Stephanie Link. She's our Chief Investment Officer at HighTower Advisors back in Chicago, and you see her on CNBC basically 2 to 3 times a week. So she'll provide insights into what we're thinking here as a partnership at large as it relates to the markets and individual stock ideas, as well as today we also had a wellness, sort of retirement wellness virtual event. And that was a retirement focusing on sort of what you're focusing on in terms of retirement and how to redefine it, if you will. So we've got a lot of content that's coming your way, and we appreciate, there's something for everybody. I think that's what we're aiming to please here at Blanke Schein Wealth Management. But let's get into our topics right now, and it's all about earnings, right? 60% of the S&P 500 have reported earnings, and as of right now, we've got sales growth. If we look at the sort of market at large of those companies, of a growth of 1.1% on the sales, and the earnings growth of 2.4% year over year. So let me repeat that. Earnings are coming in better than expected, but they grew year over year. Now, no one could have ever predicted this. In fact, markets were discounted financially heavily last year, right? Going into March, and April, and May, simply because of the coronavirus pandemic. So what is keeping the market sort of where we are, and can we continue on new highs? Well, first thing we look at is earnings, and the earnings are solid. So that disconnect that we're waiting for in terms of earnings reporting and sort of where the market is from an index level of all-time highs, that gap is closing because earnings, as I said before, are supporting that. They're coming in better than expected. And again, it's tremendous to see that corporations, management teams can execute, whether it's in person or online, but they're making business happen. And it's also showing the underpinning of the U.S. economy is very strong and solid. Now, keep in mind, we had 2 or 3 rounds of stimulus. And consumers have, whether they've been working or not, they've been paid. And that money, as we know, by M2 money supply and a few other savings factors that we follow, that money is at $1 trillion inside the banks, both for individuals and corporations. So that's another reason why markets will propel forward on a go-forward basis, simply because that money, once people start reopening, the reopening trade, will start spending that money in the economy. Now, don't forget, we also have a stimulus bill, right? The President Biden just proposed a $1.9 trillion bill, and the Republicans are $600 billion. So we know that somewhere in between, we're going to see 1.1 to 1.5 probably, somewhere in between in terms of hopefully a bipartisan support in terms of what the next stimulus looks like. But in any event, market is already pricing in over $1 trillion because Congress is controlled by the Democrats and they can do whatever they want. So that money will work its way into the system. So you're giving the consumers more money is just going to continue to fuel this market higher. Now, don't go just jumping in just so quickly. We want to kind of look at the market where we've seen it. Financials, tech, and communication sector have all been very strong. In fact, their earnings reports are averaging plus 10% in terms of what they're reporting for the fourth quarter of how they finished last year. But the earnings per share estimate were about 175, 180, somewhere in that ballpark this time last year. Right now, the estimate for this year for S&P 500 is just under the pre-COVID levels of last year. So 174, 175, which is astounding. I mean, the earnings are there, and that's what drives and propels the market. You're going to give the consumer more money by way of all the stimulus. That's going to propel the market. Now, markets don't just go straight up. We all know this. In fact, on any given calendar year, it's not uncommon for a market to pull back twice by 5% each pullback, and once by at least a 10%. So in a given calendar year, you could see 3 pullbacks by 5, and a 10. Last year we saw more than that, but every year is different. So we could see a pullback or a short-term correction in the market. expect it. We are here for our clients at Blanke, Schein Wealth Management. We're well positioned. We have our fresh money buy list, and we are positioned to take advantage of it because we believe it's a buyable opportunity. Now, when markets correct and volatility kicks up, you don't go in 1 or 2 days. You basically take your time, you dollar cost average, but more importantly, you get that shopping list ready because there's tremendous opportunities, especially on the dividend growth side. A lot of these companies, as I said before, these are earnings. So they're kicked out, and some companies kick them out as dividends. That's cash flow. Where are you going to go to get a cash flow? Some of these companies that we're looking at are 5, 6, 7% in terms of dividend income for our clients. Plus, you get any kind of appreciation, you could be looking at a pretty good substantial rate of return on a go-forward basis. So we're looking at dividend growth, companies that have solid balance sheets, cash flow positive, great management teams, buyable opportunity because we know that money's in the bank for the consumer. We know there's more money coming. The Federal Reserve is in full support, as well as Congress is going to drop helicopter money. So if you have money at home, as I said before, if you have money in the banks, they're making money. Actually, banks are making a lot of money. The financials are making a lot of money on all of our reserves because that's how they make money when we have money in the banks and they don't pay us for money. So what are you going to do? Give us a call here at Blanke, Schein Wealth Management. We'll discuss what would be right for you in terms of how we position that for your portfolio. But that's our recap for today. Earnings are up, sales growth are up, earnings per share is projected to be up for this year, calendar year. Another round of stimulus. So right now we're just waiting for the markets. When they take a breather, because you know they will, we'll take advantage of it. So that's our update for today. Thanks for watching, and we'll see you again next time.